Okay, so look, when I say the word stock market volatility to you guys, what is the very first reaction that you have to that word? Are you nervous? Are you optimistic? Does it make you feel excited? Do you see it as like an opportunity? What is the very first reaction that you get when you hear me say the word to you, stock market volatility? Be sure to let me know your reaction to that phrase, stock market volatility, in the comment section below this video, because really what we're going to be talking about in this video is just like the title says, that you need to learn to embrace stock market volatility. Now, why would I say something like that? Like, why would I say, hey, you need to learn to embrace stock market volatility? And it's really because I think stock market volatility, people really tend to look at it in all the wrong ways. Like, people look at it as, oh man, my stock investments are, 1 minute they're up, the next minute they're down, or one day they're up and I'm feeling good and I feel like I'm making money, I'm building wealth, I'm closer to reaching my financial goals, and then the next day or week they see their stock market investments plummeting and they're like, this stock market volatility is driving me crazy. It makes me feel like, am I even going to reach from my financial goals, things like that. And really, I really feel like that's when you really need to learn to embrace stock market volatility and not really look at it so much as a negative. Now, what exactly do I mean when I say that? So when I say you need to learn to embrace stock market volatility, it's because really the truth is stock market volatility is an investor's very best friend. Because let's just say, hypothetically, you're invested into a certain company and you're like, this is an amazing company, but at this particular time, the stock is really trading beyond the valuation that you would look to add, any more into that position that you're holding, right? But then all of a sudden, the stock market, takes a significant dip. Like, let's just say it drops by 20%, and you're like, hey, that makes that stock that you're holding 20%, say cheaper, assuming that stock fell by that much, just like the rest of the market. Or maybe even, it might even have like a more steeper, price fall. And then you say, okay, wow, now that the stock has fell by that much, it presents an opportunity for you, the investor who owns that stock, to go ahead and purchase more of that stock now at a steep discount compared to, say, before when the stock was trading at a premium. At the very least, you got that stock 20% off, you got a 20% discount on those shares that you could be purchasing. And then on the flip side, when that, stock market volatility, goes away and the stock rebounds and it goes the other way and now the stock is up, it doesn't even have to go up beyond where it was. It could just go right back to where it was. You are now up 20% on the shares that you have purchased when the stock was down. That's why I'm saying stock market volatility is not a bad thing. It allows investors who were not into investments pricing opportunities to get into them, investors who are currently already in there but looking to add to their positions. And it also allows investors who have been into an investment and they're looking to exit when a stock is trading at a super premium price, or the stock market is really thriving and is hitting all-time highs. And now that's an opportunity that lets investors who are looking to exit and get out, and maybe they want to, go ahead and offload some of those investments and, do some other things with their money. It's a perfect opportunity for them to do that. Nowhere in anything that I just mentioned to you is there like anything negative, associated with those scenarios. It allows buying opportunities for people who want to buy. It allows, selling opportunities for people who want to sell. That's really the way that I think you really want to look at stock market volatility. You don't want to really look at it as, oh, when the stocks are, or when my stocks or my investments, or, the stock market as a whole, when it's going down, oh, I'm losing money, or my portfolio is just, it's going down. I'm not going to reach my financial goals. Stock market volatility is always short term. Even if it's a year, 6 months, even 2 years down, which is very unlikely. There's not going to be too many scenarios where you have a year where consecutive years back to back, the stock market is just, down heavy. And if anything, that's going to really put you in a situation where a really great buying the dip opportunity, if you could even get a scenario like that, right? But the likelihood is, even if the market had took a significant, dip back really, really far down, over the span of those 2 years, it's going to gradually be moving up. It's not like it's just going to stay at a super deep low and then not rebound at all for 2 years. So this is why I'm saying stock market volatility is truly the investor's best friend. It allows you to get really great discounts when you're looking to buy. It allows you to capitalize on really high premiums when you're ready to sell. And just because the stock market volatility is there does not mean you have to be reactive. Like, you don't have to buy just because, a stock goes down, or you don't have to sell just because the stock goes up. It's just movement. That's all it is. It's just price movement or price valuation movement. Doesn't mean that you actually have to be reactive to it. And as soon as you can learn to just control your emotions, your feelings, and basically be kind of stoic or non-reactive to it, and only be reactive, or kind of be not even necessarily emotional, but only respond when it's necessary for you, when you realize like, hey, you want to take advantage of that stock market, when you want to take advantage of that stock market volatility, that's really the only time you really need to be concerned with it. Because other than that, if you're not going to be looking to buy or you're not looking to sell, it doesn't really matter, because you're just going to stay focused on your long-term financial goals, your long-term financial investments. And as long as you're in good investments, that stock market volatility, it shouldn't be bothering you none. It shouldn't give you no headache. It shouldn't be making it hard for you to sleep at night or anything like that. You got solid quality investments that are growing at a good rate annually. Your investments are solid. You're on track to reach your financial goals. Don't be worrying about the fluctuations from a day to day, a month to month, or even from year to year. It's at the end of the day, if you are invested in high quality companies that have a proven track history of going up over time, then there's really nothing for you to be worried about. That's what you really need to be more focused on, rather than be worried about any, level of stock market volatility. You really just want to be focused on and make sure that you absolutely understand the investments that you have your money invested into and your money behind. Because the less that you understand your stock market investments, when you start seeing that stock market volatility and you start seeing, the market going up, and you start hearing, oh, then you feel good. When the stock market's going up, you're like, oh yeah, I'm killing it. My portfolio is doing great. You see your stocks or whatever holdings you have, you've seen those go up. You're feeling great. You're on an emotional high. And you don't really understand your investments. You just are holding them. You just purchase them because somebody told you to, or you heard about them in the news, or maybe even some other financial YouTube channel recommended it to you. You purchase those shares of that stock. The market's going up. Everything's great. You're all excited. You feel good. But you don't understand the investments. You don't know really what that company is. You don't know what they do. You don't know how they make their money. You really should not even be in that stock, because you don't know it. You don't understand it. Now, when the stock goes down, you're absolutely terrified. You don't know why the stock went down. You don't know if the stock going down has anything to do with the actual business. Like, did they do something wrong? Is there something fundamentally wrong with the business? You don't know, because you're in the investment for all the wrong reasons. This is why I'm saying that's where you're going to start getting uncomfortable. You're going to be nervous. You're going to be thinking like, did I make the wrong move? Did I purchase the wrong shares? Did I make the wrong investment? You're going to really question yourself and beat yourself up, and it's going to make it hard to sleep at night. So rather than be worried about, oh, the stock market going up or down, or investments going up or down, really what you need to ask yourself and really get a good handle on is make sure that you truly understand the investments that you're going to be selecting and putting your hard-earned money behind. Because the better that you understand those, when all this stock market volatility is going on, you got sharp swings up, sharp swings down, none of that's going to bother you. You're just going to sit back, chill, use the volatility to your advantage. When it dips down low, capitalize, buy the dip. When it spikes up, just consider it like, hey, you're winning, your investments are up. And then when it is time for you to sell, you obviously would rather sell when you're way up rather than when you're way down. Just use stock market volatility to your advantage. Don't look at stock market volatility like it's out to get you. Hey, so if you made it to this point in the video, what I want you to do is look right here on the bottom right side of the screen. I want you to find that subscribe button. Be sure to hit that subscribe button for me. And then what's going to happen next is another video from my channel is going to pop up here on the screen. You guys are going to enjoy that video. So go ahead, tap that video on the screen, and I will see you guys in that next video.